Hey guys, welcome to our first video of 2022. So today we're going to chat about some liquidity farming. Now these are 3 projects that I've just recently set up liquidity farming for, and I'm planning to run it for the next 12 months. Yeah, they've all got pretty good returns, so we'll see how it all goes. So liquidity farming's a bit more of a solid passive income, a bit more reliable passive income, I guess, than some of the DAOs. You'll notice a lot of the DAOs actually deploy their assets to do liquidity farming to make money. So if you can find the right liquidity farming plays, they're not something you can necessarily hold for 5, 10 years, things like that, because it all depends on the token that you're holding. Obviously, a lot of these projects we're not planning on holding for life, but we are planning on jumping in and holding them for a good couple of years that I think we'll get out of them at least. So yeah, I'll jump over and show you. So the 3 pools that I've recently set up is WILDER. So this is a huge metaverse game. So I'm not going to go into too much detail about the games because this video will drag on a bit too long. But I will touch on briefly when I talk about it. But WILDER, the other one is Alluvium. So I recently jumped onto this as well. And then the last one is Tomb Finance. All right. So we'll start off with WILDER and we'll chat about this. So basically, it's a big metaverse. All right. Jake Paul's actually an early investor, and you guys listen to a lot of podcasts. Pomp is actually pretty keen on it as well. He's going to get involved in it. So they've got NFTs. It's kind of like Sandbox. Okay, it's the easiest way to probably describe it. All right. But the reason that I sort of want to get on this is if you jump on and you look at their staking, the staking rewards for 1 year are currently 280%. All right, so that is obviously huge. Okay, so and if you look at the charts, we've pulled back 50%. Right, so we peaked at about $7, so we've had a pretty solid pullback. Right, so we're not buying the tops. We're definitely not getting this project early. But it's at that sort of size. They've got a lot of stuff coming up over the next 12 months. They've got all the game coming to release. So if you jump on their website and have a look, they've got the game getting released, the alpha version next year. They've got all the NFT land sales still to go. So there's a lot of catalysts coming up that I think this game's going to be around for a while. And if you look at the market cap compared to Sandbox and things like that, 283 million with 1.6 fully diluted. It's actually pretty, not pretty small, but it's a pretty nice size for a big metaverse project. So if they pull off what they're trying to do, they're actually going to be worth probably 5-10 times that. Okay? And the permanent loss and things like that isn't going to be too bad. Right? So I'll quickly jump on and explain to you what exactly providing liquidity is. Okay, so if you've ever bought some of these tokens on something like Pancake Swap or Sushi Swap or something like that, that's what's called a decentralized exchange, so DEX. So what you're doing when you're providing liquidity is you're putting money into the pool, right? And this is what people buy and sell tokens from. Okay, they need other people to provide money into this. So usually the projects will supply an initial bit of liquidity into the pools, okay, and then after that, they need other people to provide liquidity. And the reason they get people to do that is by incentivizing them. Right? So if you want to put, say, $10,000 into this, so that means your whole $10,000 is going to be making that 280% a year return. Okay, to put $10,000 in, you need to split that 50-50 into 5,000 of wild and 5,000 of ether. Okay, because you need to supply even amount of each token and then deposit it into the pool. Okay, and then for doing that, you're going to get paid out that 283%. You're going to get that paid out in wild tokens. Okay, so this is why you don't just want to find projects that have high APY for providing liquidity. You want to find projects that you actually like holding and that you want to hold, because if the projects don't succeed, you're going to lose all your money anyway. Okay. So it's just a bonus way to make a bit of money on projects that you want to hold. Okay, it's not a way to make money on just random projects that you don't think are going to be around for at least the next sort of, year or so. All right, so now to sort of explain that. So to do that for Wild, if you want to do it, you need to jump onto their Discord, have a bit of a look, and you can find this article here about the staking and liquidity mining. Okay, and if you click on the link here for liquidity pool, token staking, it'll take you to Uniswap. Okay, and this is where you need to provide the liquidity to be able to stake it on Wild, right? So you come here, you provide, however much Wild you want, the same amount of Ethereum. You're going to have a couple of transaction fees, so it's not worth doing this unless you've got really $4,000 at a minimum, I'd say, to be putting into this, right? If you've only got $500 or something like that, you're going to be spending $400 or $500 on fees setting this all up. So it's not really going to be worth doing. Okay, but once you've done that, you then go back to the Wilder staking, and then you then stake it in here, and then that's where you earn your Wild tokens, right? So as more people do this APR will drop, but at the moment it's sitting at 80%. But if you don't mind holding Wild and Ether, then it's a pretty good play, right? All your rewards are locked for 12 months, but you can pull your liquidity at any time, right? But you just got to wait 12 months, to earn all of that, right? And if you look in here, I only did this just the other day, and yeah, I've earned 15 Wild, so I think I put about $8,000 Aussie into this. So I spread 25 grand out roughly across the 3 pools. So yeah, I can't claim that for 12 months, but it's just a nice little sort of passive income there. And the only risk you really have with something like this is your impermanent loss, okay? So what impermanent loss basically means, so say you've got, have a look here, initial prices. All right, so if you have, token A, let's go, Wilder is worth what, $3.40? So $40, and say Ethereum is worth that. All right, so let's say if Ethereum doesn't go up in price, but Wilder, say, doubles in price. Okay, so if Ethereum doesn't go up in price, but Wilder doubles in price, then you've had a permanent loss of 6%, okay? And now that is in comparison to if you just held it all in Wild, right? But if this sort of, say, went nuts and went to $70, okay, that's where you're gonna have a bigger loss, because if you held it all, you would have made $10,000, and by providing liquidity, you've only made $4,500, right? So you haven't lost money technically as such, because you haven't put that much in. Okay, this is all based on if you only had $500 of each coin, right? So you're still going to be making money, but it's just you technically would have made more money if you held it all in Wild. Okay, so if Ethereum doesn't go up much in price and Wild goes absolutely nuts, then yes, technically you may have made more money holding Wild, but you are getting paid out all your rewards in the Wild token. So if that goes up, then your rewards are going to be worth more as well. Right? So you've got to weigh up what the chances of everything that happening is. But because Wild's already reasonably expensive, I don't see it necessarily going nuts. It could go 5, 10x, and if it does that, then that's great. But Ethereum, I think, should at least really double if Wild is to do something like that anyway. So if you go back to your permanent loss, say it does that, but if Ethereum, say, doubles, then you haven't lost as much, you've only lost 5 grand. Okay, but this is talking about if you'd only put $1,000 in, but you're going to be making all that APY anyway in the Wild token, so it sort of cancels out. But jump on to an impermanent loss calculator and play around with a few figures if you've never had a look at one, and you'll start to understand it all. Okay, so yeah, that's the first little play that we've set up. Jump into that Discord, and there's a few good videos on YouTube about it too, explaining Wild. I'll do one soon, but there's one that we posted in our Discord recently that he goes through some great detail and explains everything about it. You're going to see why we're bullish. So the next token that I've set up liquidity farming for as well is Alluvium. Now, same thing. This isn't a new project. This isn't something I really would want to do with a new project. This is something I'm doing because don't see that much potential necessarily upside just holding the token. Okay, because their market cap is already 600 million. But they're fully diluted as 10 billion, right? So these are guys that are already worth, a huge amount of money. They've already had a big run up. But if you go in and dig down in Alluvium, I think they're a game that's going to be out for a while, okay? And I think they're going to be one of the top play to earn games. I think the play to earn space is going to be huge. So one of the best ways that we can make money on this for me is by providing liquidity. So same thing, to get this reward, you've got to lock it for 12 months. All right, so I've locked mine for 12 months, but I'm going to be earning 355%. So that $8,000 that I've locked up, if prices and APY and everything stays the same, going to be getting 355% on that $8,000. Okay, so it's good money to make for doing nothing. The catch with this is same thing, a lot of Ethereum fees, and you've then got to vest your tokens. So if you jump over to the staking, you can sort of read in staking here the facts. You can read a little about all the proper ins and outs of it all. But basically, what they're saying is every say month or 2 months, whenever you want to do it, you have to claim your rewards and then vest them. So when you vest them, it means you've got to take your rewards and then lock them in the staking pool for 12 months before you get access to them. Okay. So it's going to take you 12. So this is locked for 12 months. And then once I get the rewards, I've then got to lock them again for another 12 months. Okay. So it's going to take a while to actually get your money back. And that's why you don't want to lock up too much money because you're not really going to be able to get access to the liquidity for 12 months. Then your actual rewards from that, you're not going to get access to some of it for up to 24 months. All right. But if you jump on, have a bit of a read, if you go on their main website, look at their trailer, this is a pretty awesome game. So I'm happy to put, $8,000 aside for now and to see how it plays out. Because again, if this plays out, that $8,000, you could get 350%, plus the price of Alluvium could, may not necessarily do a 10x, but it could double. And the price of Ethereum I've looked up could double as well. So you're looking at, still decent returns, just as a sort of side thing that you're not doing anything for. All right. And the last one that I've locked some money up in is Tomb Finance. Now, this is a play on Phantom. So if you're bullish on Phantom, jump on, have a look through their docs and read this. So basically, you don't have to worry about a permanent loss with this, but you have to worry about whether you like Tomb Finance or not and what they're trying to do. But what they're doing is it's an algorithm token that's pegged to the price of Phantom. Okay, so you stake Phantom and Tomb, but Tomb is basically pegged, it deviates slightly, but it's basically pegged to the price of Phantom. So you don't really have much impermanent loss that you have to worry about there. And the only thing is whether you think Tomb's going to survive and be around, So if you do like Phantom, have a read about Tomb. And if you like that, you got to jump over to Spooky Swap, and you've got to supply it there. Okay, so supply some Phantom, buy some Tomb, supply that. And then once you've done that, you've got to come back over. I'll just connect MetaMask quickly. Okay, Phantom. Just connecting my dummy account. All right, there you go. So see here, the APR for this is 160%. Right, so it's not crazy high, but this is just for one sort of loop of it. All right, so you earn that, and see you earn the T share. Okay, but what you can then do with that is you take that T share, you then go to the Masonry, and then you stake what you're earning. Okay, and then when you earn that, you can get this API is at about 500%. Right, and then you earn Tomb. Right, so 530%. So you're 160%. You then stake that again, and then you earn 500% on that. And then when you earn the Tomb, you then can sell half of that to Phantom, and then buy, restake it. So you can earn that loop there, and you can get a higher APY. Okay, or what you can do, so I just put, this is the dummy account, so I'm not showing you my real wallet here. But this here, you can stake it all through, Beefy Finance. There's a Grim Reaper as well. Okay, there's a few. This is an auto compounding site. So you can go here, then all you gotta do is lock it up here, and then say you get the APY of 367%, and you don't have to do anything, right? But you do have smart contract risks. Okay, there was an auto compounder that recently got hacked, and everyone lost their Tomb FTM LP. So it's definitely not something you want to go throwing your life savings into. That's why you sort of want to spread your risk out. So that's why across the three of them, I've only done about 24 grand, and I'm going to find a few more plays to sort of load up on. And then if they all sort of play out, or if one of them doesn't work, I haven't, committed too much money. Okay, still been doing the micro cap plays, strong, all that other stuff. But yeah, definitely gonna be looking to a bit more LP stuff this year. So I just wanted to show you guys, yeah, just a way that you can sort of make a bit of money. So if this all plays out, it's not going to be hard for that 25 grand to potentially turn into 100 plus, especially if the price of Phantom goes up and if the price of Ethereum, Alluvium, so if the price of all these tokens go up, I'll obviously make more. But even if we just go sideways for 12 months, you're still going to make money. Right? So now that everything's had a big run, or even if we go a bit bearish, you're at least still accumulating all of these coins while the market's going to drop. So especially while the market's in this bit of a weird phase where we could be accumulating sideways for a while, it's just a good way to be generating more of all these assets while you're waiting for it. If you've got any questions, jump into the Discord and let us know. If you need me to go into more depth or anything, let me know. But yeah, I didn't want to bore you guys with too much details, so I want to give you a quick overview of some of these high APY farming plays. I hope you guys learn a bit, and yeah, any questions, jump in the Discord and let us know. Thanks guys.